Hi, I'm Malcolm Graham Wood, and I'm back at Core Finance for my CEO interview slots. Today, my guest is George Lucan, CEO of Angus Energy. Welcome back, George. Nice to see you again.
Good afternoon, Malcolm. How are you doing?
Yeah, I'm in very good nick, actually. Thank you very much. And nice to see you're keeping busy all the way up to Christmas.
Yeah, you may have been following our Twitter feed. We installed the last section of pipe before National Grid just this afternoon, in fact, this morning. So,
well, that's great news. That is great news. So
great.
It's been a busy old year. I've interviewed you a couple of times. You've had a lot going on. Despite the fact that you've had COVID to keep you on your toes, perhaps you could give us some, dig a little deeper into what's been going on this year so far.
Yes, well, it hasn't been an annus terribilis, but it's not been a great year. In terms that progress on Balcombe clearly is slower than expected. We're awaiting a planning decision there, and we expect to be in front of the committee, we think in February now, but with no clear indication yet. We're also waiting on environmental agency decision on Brockham, and that again is anticipated in the new year. So there's a frustrating wait. And as you know, we've been trying to assemble a very significant debt facility, probably one of the largest debt facilities that the onshore industry has seen in a while, to fund the equipment and the full program, in fact, at Salt Fleetby. And that's been occupying a huge amount of management time. It's as you know, hydrocarbon finance has got really difficult this last year.
Yeah.
Very, very low prices. We've seen ESG issues crowding out the market there, discouraging all sorts of potential sources of capital, and we've got COVID just thrown in, and that's made it extraordinarily difficult for us. But we're now right with the group of investors we think we need to be with, who are resourceful, intelligent, understand the industry, are able to make sensible, intelligent risk assessment, and come up with what we believe to be the best pricing that's available to a company of our size engaged in an industry like hydrocarbons. So that's been really hard work. I'll be honest with you, been at it since March, trawled 30 or 40 institutions, and here we are. We believe we're finally there. We've got the partner that we want, and we will have the funding that we want. And I think we've advised publicly the end of January is our target date, and we're going to hold fast to that as best we can.
Excellent. And in the meantime, you just announced a fairly modest raise in the equity market, £250,000. Talk us through that one.
Well, I'm really looking there to have a working capital buffer in the event that the facility isn't as speedy as we expect it to be. We've of course actually back in October and November already started acquiring some of this kit that's meant to be financed eventually by a debt facility, and we've been putting down significant deposits, and that's chewed into our capital. And you never want to be getting close to the edge. So what I thought was we'd do a small raise now, as small as we possibly could, because the price, in our view, still doesn't even vaguely reflect the value of this company. So we don't want to make it painful for shareholders. And the £250,000 raise was about sort of 4 or 5% of the company's capital, and gives us a nice, comfortable buffer to deal with any sort of delay in the debt, none of which we anticipate. I hasten to add at this stage.
Good. So why don't you talk us through the various milestones that you've achieved this year in Salt Fleetby, because it's the prime of your asset portfolio.
Well, the first milestone was to get a competent persons report that came out right in the first quarter from Oilfield International, exceptionally well-respected competent person in Tim Lines. And I know that now because having been through a due diligence exercise with 10 or so financial institutions, they all hire their own competent persons. And these guys all know each other. So you get an immediate understanding of whether or not you had picked the right person, and I believe we had, because we certainly convinced all of them from a technical standpoint that the field is worth at least what we say it is, and that's at a P90 case at 38 pence a therm. I think we were talking about 17 million for Angus's share. Bear in mind our market cap today is 5 odd million. So that's the 90% probability case at a relatively low gas price. You know, in the last week, gas price has been happily into 40p and above territory.
Yeah.
And long may that continue, except when I come to pay my bills. So that was a very big milestone for us to have such a convincing report on such an excellent asset out there. And that armed me up to talk with finance providers. And that was the second really big step to actually secure a good partner. And I believe in Aleph Commodities. They've recently proven performance in fundraising in Sweden in another hydrocarbon project. They have a stable of private equity behind them. And we're very happy they've got the technical expertise to act as mature partners in providing finance. So that was step 2. And I think step 3 has actually been to complete all the conceptual design of these processing facilities. So we got Optimus in Aberdeen, a reputable design house, has done site schematics, the basic process flow diagrams, is now generating, they're called P&IDs, the actual detailed schematics of how each bit of equipment will interact with one another, on top of which we've secured 3 bits of 3 major pieces of equipment, although we haven't paid in full for them, obviously. So we're well on the way to actually being able to say to shareholders, well, we said we could reconnect this field and get it going again, and we now believe we really, we can.
Yeah.
And it's worth doing. So that's great. I suppose the last one is to get the pipe connected. It's not absolutely complete, but 9/10 of it is done.
Yeah.
And that's been done, frankly, and you'll know this because you speak with every other CEO in the onshore industry, in decent time. And you know all the headaches we all have with planning nowadays and approvals. And normally you're looking at often 2.5-year horizons when you've fought through all the thicket of regulation and planning procedure. And here we are in Lincolnshire, and we've managed to get really very swift permission on both the pipeline and the sites, and get down with diggers and show shareholders on our Twitter feed, there we are, we're actually doing it. We said we'd do it, we're doing it. And we hope to be able to say sometime in early January, we've done it. So
yeah,
that's a real positive for us this year.
Good stuff. So what with Salt Flippy, and then you mentioned Balkan Brockham, that's the main part. So is there anything else within the portfolio that you might be attending to, or should we move on to what you might add to it?
Absolutely. I mean, it's something that we've looked at for a year, and it's to branch out a little bit into the alternative energy infrastructure space. And we're looking very closely at geothermal.
Wow.
I know a number of operators are looking at geothermal from a perspective of repurposing old oil wells. And we have got some more than ideas. We have full hydrogeological reports on that. But we're actually branching out a little bit more boldly into wholly new sites and wholly new drills, and for significant generation. So we're looking at deep geothermal, sufficient to generate power. We have identified sites, and we have done preliminary costing of drilling and of surface equipment, and we've explored connection as well. So this is not a whim of the company. It's exercised a lot of our technical resources now for months, and I hope to be able to present a full summary to shareholders in Q1, if not in the very early new year. But as I say, it's very exciting for us. And just by way of background, rather than solar or wind, the geothermal is a very natural transition for a driller.
Yeah.
You've got to drill a hole.
Yeah, I mean, I've spoken to, as you say, one or two of those CEOs in the business, and I find it interesting because most of the time they say, Malky, we've got a huge portfolio of wells which we've drilled over the years, gas or oil, in whichever particular part of the process. But it's the fact that we've got a sort of library of wells we can go back into. I find it interesting that you're talking about drilling new, deeper wells. I would have thought that one of the arguments for geothermal is that you're using a library of wells which you've already drilled, which saves money. Is that you're drilling new, deeper wells? Doesn't that eliminate the money saving a bit?
Well, no, they're absolutely right. And we're looking at 2 wells at Saltfleet beyond, which is potentially surplus to our requirements for exactly those reasons. And of course, it's considerably cheaper and a very good way of taking one's existing stock and using it. People might call it turning swords into plowshares, as Shakespeare said.
Yeah.
The issue we have with that is that the depth of most of our wells, it's not true for all of the onshore industry, is insufficient to create the heat that would turn water into steam and provide for generation of electricity. It doesn't mean it's useless. It's good heat for all sorts of things, for enhanced agriculture, for district heating, where you've got proximate populations. But if you want to make it a a significant electricity generating operation, then most wells in the onshore industry won't be suitable. The ones, at any rate, that I'm familiar with.
Yeah.
But we'll be looking at enhanced agricultural possibilities in Saltfleet and for a couple of those wells, as we already have at Brockham for one of the wells there. So
yeah,
not something we dismiss, but to make it significant, you have to go deep.
Yeah, so that's interesting, and it may be for the longer term, but you'll be the pace setters in this, which is good.
Well, possibly. We're impressed by I had conversations with other my peers, and it's something I think we're all looking at. But if you look at it from our perspective, what are we good at as Angus? Well, we're smallish scale. We're used to the rough and tumble of planning and regulation, and keeping costs nonetheless to a sensible level. And we're drillers. So we're spending a lot of our time looking and trying and guesstimating what porosity and permeability is 2, 3, 4, 5 kilometers below the earth. This is exactly what we do. So for us, it's a very natural transition, and we're happy to do it.
Good stuff. Elsewhere, apart from that, there are one or two other gas projects around. Any sign of you having a look at those at all, George?
Well, there are some. We've identified 2 in particular in Eastern Europe. My overwhelming sense is that shareholders want to see one project tucked under the belt and closed. But there's a lot out there. And there's a reason there's a lot out there. It's because capital is so scarce. So there's projects which were going asking 10 million quid 3 years ago just to let you in, and they're now they'll let you in on a carry. A different world altogether. And I'm very glad we didn't move last year. We had a number of opportunities in Ukraine and Poland and Romania, which we looked at very carefully. Had we done so, particularly those which had substantial oil reserves, we would be looking very silly right now. Are
you seeing, I suppose at the moment, with having had the pandemic and the Brexit talks not finished, the government are hardly looking at it, but are you seeing anything particular coming from the people in government, in the energy and so on areas that you speak to, that is becoming anything like more friendly for domestic energy, gas production, or whether it includes gas or geothermal or anything else. But have you had any feeling that people are realizing that we're going to need gas one way or the other?
I haven't, to be honest. I don't believe the environment's grown more hostile. In every white paper or ministerial statement, there's a recognition that we require onshore production. That we all do understand that the end goal is as little of this, as little hydrocarbon as is conceivably possible. But there's equally still a recognition that that's a 30, 40-year goal. And if we took all the geothermal, wind, solar that we could possibly do and threw every penny we had at it, it would still be a 20, 25-year, 30-year, very consistent.
Yeah. So, I just thought that last week's paper threw a little bit of a fish to the onshore industry, but
I think there's a little bit there. I mean, we look at our gas production, and we look at what sets the price nowadays for what's the national balancing point. How many pence per therm do we get? And what sets the price now is China, and this was never the case even 2 years ago, because now I think we import more by LNG than we do by pipe. So, more coming by LNG than from the interconnect with Brussels or Norway. But that LNG now is a very global market. So if China gets going and it needs extra supplies, it takes our Qatari gas. And I don't think people saw that 10 years ago. I think they saw it very much as our secure backdoor supply. And it isn't. And we're beginning to discover that this year. So I think government will focus more on energy security in the next few years, and we'll have.
And I guess that with less oil coming from the lower 48, there's probably less associated gas coming from the US. So
that too, yeah. So
listen, time is no friend of ours at the moment, George. I'm noticing that we're nearly at the end. At the end, I always like to ask. You've put everything really nicely together for us this afternoon in what's been going on. So the obvious question is, where does that leave Angus set for next year? You've got a number more landmarks you've explained to us today about the debt and the financing and so on and so forth. How does it look for Angus maybe this time next year? What will you be telling me then?
Well, it's production and cash flow next year. That's the main thing. So once we have this facility and we can complete on procurement, that sets our timeline to some extent, and we're in their hands. But once we have it, pretty much all the other permissions that we need are there or comfortably in process, and we're confident about. So it's a matter of our technical team to execute. And I'm very pleased to say I've managed to recover very many of the original staff from the field, as well as some additional processors. So that I feel very comfortable. I've got the technical team in Angus that can actually execute on this competently. All I need now is the money. As Churchill said, give me the tools.
Excellent. George, thank you very much indeed for taking time out in the week before Christmas to talk to me. And I wish you and your family and your whole team there a happy, safe Christmas and a really good New Year for Angus. This afternoon, it's pleasure. This afternoon, my guest on the Core Finance CEO interview has been George Lucan, the CEO of Angus Energy. Thank you very much for watching. Thank you very much, George, and see you next time. Bye now.